We received a fairly troubling forecast from JPMorgan on Friday, with analysts writing in a letter to investors that oil could hit $380 per barrel in the event of Russian retaliation against the new G7 moves to cap the price of Russian oil. And I covered this recently at the G7 meeting in Munich. G7 leaders had discussed potentially implementing a cap on the price that other nations could pay for Russian oil. And I haven't seen a lot of details about this mechanism. I don't exactly understand how the G7 intends to control the price that nations like India and China and the other BRICS nations, for example, pay for Russian crude oil. But I'm sure that they have some scheme up their sleeve, despite the fact that we haven't seen any details yet. And in this letter to investors, JPMorgan analysts write that the Russian economy could withstand a crude production cut of up to 5 million barrels without excessively damaging the economy. And if you recall, back in March, we got a warning from Russia of $300 oil, and this was in the increasing rhetoric at the time regarding the possibility of a European oil embargo. And in fact, we did see that. So now the G7 and the West are even taking it a step further, and they're talking about not only halting the flow of Russian oil to the West, but trying to control what the remainder of the world is paying for Russian crude oil. So even if they're successful at doing that, even if they do implement a cap, the Russian response may simply be to say, well, if we can't sell oil at a fair market price, we're not going to sell it at all. And if that happens, JP Morgan believes that the price of oil could go up to $380 a barrel. And that, I don't have to tell you, could create a massive economic crisis, not just in the West, but worldwide. We're already suffering economically. There's already talk of a recession with oil around $110 per barrel. So you can imagine if we get a more than threefold increase in that price. And this is a chart of the top oil producing countries for 2021. And you can see the US at the top of the list there with 11.5 million barrels per day. Russia in the number 2 spot, and Saudi Arabia a close third. And there have been a lot of talks lately of getting Saudi Arabia to increase their output in order to help ease the pain that everyone around the world is feeling with the current high energy prices. But if Russia were to cut 5 million barrels per day, that's almost half of their production. There is no combination of oil producers in the world that can increase their capacity enough to compensate for that drop. And that's why we may see the price skyrocket if they do make such a move. And they've threatened to in the past, and now even big banks in the West like JP Morgan warning that this could happen. And some investors may take solace in the fact that at least the US is the top producer in the world at the moment. So, we probably would suffer less than, say, other large importers of energy, but that doesn't really tell the whole picture. And this is from the Energy Information Agency. It's a department of the government, EIA.gov, and this is on their frequently asked questions page. And some of the information they provide here shows us that the US actually produces more than 11 million barrels per day. If you count natural gas liquids, biofuels, and oxygenates, and refinery processing gain, our annual production of oil in terms of millions of barrels per day is about 16.58 million barrels per day. So that's a tremendous amount of energy that the US produces. But on another frequently asked question page from the EIA, there's the question, how much oil is consumed in the United States? And according to this government data, the United States consumed an average of about 19.78 million barrels of petroleum per day in 2021. So you can see that despite the fact that we are the world's largest oil producer, we are also its biggest consumer by far. And even though we make a lot of oil here, we still are a net importer. We still are not completely energy independent. And so, we already have a record high trade deficit. Well, if we see oil go to $380 a barrel, that is going to exacerbate that problem significantly. We're going to be forced to print more currency and send it overseas to get the energy and the goods that we are accustomed to having. And we saw recently on Friday, even with all of these recession fears, this is a headline from CNBC, oil jumps nearly 3% as supply outages outweigh recession fears. There's a lot of talk of economic slowdown lately. The GDP numbers just got revised down by the Atlanta Fed for Q2. And when those numbers come out on July 28th, if they are as low as the Atlanta Fed predicts, we will officially be in a recession. And despite that fact, the tight supply in the oil market was enough to see oil climb. A number of other commodities were falling. We know silver had a big sell-off on Friday, and yet oil was in the green, remaining well above $100 a barrel. This just shows that the oil market, one, is already extremely tight, and that even an economic slowdown, which we're guaranteed to get in the event of $380 oil, even that will likely not be enough to ease the inflationary forces that are causing higher oil prices. Because, as the oil prices rise, certainly consumers can adjust their behavior accordingly, and they will. They'll do what they can to consume less energy as it becomes more expensive. But with something like petroleum that we are clearly so dependent on and so addicted to in our economy, there is only so far that adjusting consumer behavior can reduce demand. I mean, there is a certain inflexible amount of demand that in order for society to continue functioning, we are going to need to consume that much oil. And at any price, it will get consumed. And if the supplies become so tight that it cannot, I mean, we're talking about an economic crisis, the likes of which we've never seen. It'll make the Great Depression look calm by comparison. Now, I don't know that things are going to get that bad. Maybe Russia won't cut their oil production. Maybe we'll just continue to see the gradual increase in oil prices, and it won't be anything as marked as a spike up like that. But it's important to be aware that such a thing is possible. And if we do see that, if we see the economy start to enter into a serious decline due to high energy prices, I think we all know what the Fed response is going to be. They're going to be forced to open the floodgates of liquidity. I mean, it's really the only tool they have in their tool chest. And if that happens, or when that happens, it's going to become clear that the Fed's fight against inflation is going to take a backseat to trying to keep some vestige of economic growth or economic recovery, what they call economic recovery, in place. And so, should we see the price of oil spike up as JPMorgan is forecasting it could spike up, expect to see the Fed printing lots of fiat currency regardless of how high the rate of inflation goes. So let me know what you think in the comments down below. Do you think it's possible that oil could spike up to $380 a barrel, or is that just too crazy of a move? And if it does, what do you think will be the consequences? Let me know in the comments down below. Thank you all very much for watching. If you haven't subscribed to the channel yet, consider clicking that subscribe button so you can see more videos like this one, and I'll catch you next time. Smart Silver Stacker, out.